Welcome back. Well, HEG is the stock that we're looking at right now. The company reported a weak set of first quarter numbers with the EBITDA margins coming in at a multi-quarter low of 6.7%. The net profits also slumped 83%. To discuss the Q1 results, we're joined by Executive Director of HEG, Manish Gulati. Manish, thanks for joining in. I just wanted to understand what went wrong this time around. The results were quite weak. The EBITDA margins at a multi-quarter low. Can you share with us what the outlook is going forward? What were the utilization levels and what is the kind of target that you're looking at for FY25?
Good morning. About this quarter, I wanted to mention an exceptional thing, which you can see in the other expenses, that we have some investments and we have done mark to market at fair value. And if you look at the quantum of that, just compare with the last quarter, you can see the figure. So that is an exceptional circumstance. So which is why you can see the EBT is to be down. Otherwise, barring that, our operational performance is similar to that of the last two quarters. Our capacity utilizations for the last year were in excess of 80%, and this quarter also they're close to 80, not 80, but close to 80%. And we have expanded already to a 100,000 ton capacity through the year. Although the next 2 quarters, 3 quarters seem to be weak. There's weak demand from weak production of steel and weak demand of graphite electrodes. So another 2 quarters are expected to be weak. But about capacity utilization, we still hope that through the year, when we close this year, we should be close to 75%.
You said Q2, Q3 will be weak in terms of volumes, right?
Weak in terms of pricing. See, the pricing continues to be under pressure. There's reduced demand. Of course, that brings pressure on both, actually, the volumes as well as prices. So we will, I think that we will have very similar results, barring that exceptional circumstance, which I told you about this quarter. But the next 2 quarters are going to be very similar to this one.
So what is the volume guidance for the full year? Keeping all this in mind?
I would think
75,000 tons.
Yeah, 75,000 tons. That's right. That's the plan.
And can you tell us, you have some expansion plans that are taking place. Post the expansion, what is the kind of cash on your books? And any way to reward shareholders, either through a buyback or anything else, that you're looking at? How would you be using the cash on the books post the expansion?
We have about 825 crore and less loans of about 600 crores. So net cash is about 225 crores or something. And as you can see, we have announced the stock split. So that would definitely benefit the shareholders in the long run by increasing liquidity, discovery of fair price, etc.
Manish, you said that margins were depressed in the current quarter because of this non-recurring increase in the other expenditure. So what would margins go up to, say, in Q2, in the absence of this jump in other income?
Other 2 quarters are going to be very similar because we
in
don't
terms
see
of margins,
the pricing continues to be under pressure, although we are still trying to sell more and more. And if you compare ourselves with our peer group globally, you'll see HEG still doing the best among all our global peers.
So when you say pricing is under pressure, could you put it in numbers? What are current prices? How would it compare with, say, a year ago? And in Q2 and Q3, do prices fall further or stay at current levels? Give us some numbers.
The numbers are, it's everywhere, anywhere between 5% or something, and it is coming down quarter on quarter. But we are more concerned with the spread because the key raw material, which is almost 35% of our cost, that is also coming down, and there's a time lag between the two. So that is why the electrode prices are coming down, the needle coke prices are coming down, and we are able to maintain that kind of margin for the last 2 quarters. And going forward, at least it's clear that demand will take a while to come back. So you have to bear with us. However, the future of this industry is absolutely bright. We know the new electric arc furnaces, which are getting constructed, as a big demand on the horizon. We can clearly see, we have data on all the steel plants, who are building plants, US, Europe, in Middle East, everywhere. So the demand is going to come very soon. It's just we are waiting for the time to turn around.
What about exports?
Our exports have always been 2/3 of our
Correct.
production in that range. So whatever, the business increase should happen in exports, because India is still more a blast furnace based country, and the new electric arc furnaces are coming in the developed world, predominantly in US, Europe, and some Middle East countries.
Okay, Manish, we'll let you go on that note. Thank you so much for joining us. Appreciate your time here on CNBC TV18. Let's slip into a short break. We'll get you more on the markets on the other side. We'll be joined by Arun Jain, the Chairman and Managing Director of Intellect Design. Stay tuned.